just to give you the full background of it, originally crypto, it wasn't really considered money. Like it wasn't really a big issue. And so the way the IRS looked at it was just, property. And so before 2017, you could do like kind exchanges, meaning if you buy Ethereum, you sell it, exchange it for Bitcoin, you exchange it for XRP, you exchange it for XLM. None of those were taxable events back then because they were considered like kind exchanges. But in 2017, they changed that. They said, hey, there are no more like kind exchanges unless it's for real estate. And so now all these, every time you sell it, every time you spend it, every time you exchange it for another crypto, all of those now are taxable events and they're capital gains / losses. And they all have to be reported on a form 8949. And so people who are in this DeFi space, people who are consistently just trading, the perspective I like to give people is I say for every time you spend, trade, or sell, just add a $15 to $20 accounting fee onto it. Now, would you still do that trade? Would you still spend it? If you're making thousands of dollars, you're not worried about that $20 fee. But if you're spending $5 at Starbucks or something like that, the accounting fee is higher than what you spent it on. It's not really worth it. And so then there's other people who like to earn income in Bitcoin and crypto. And so if they're doing that, it's really not taxed any different. It's just, just as you would with US dollars, you just look at the fair market value of what the amount of Bitcoin is worth in US dollars at that time, and you report that. But then once again, every time you sell it, spend it, or exchange it, all those create taxable events and those have to be reported.